All right, guys, welcome. Eric, Music City Trader. This video, I'm going to be showing you basically a problem when the cross happens in the double crossover method if it happens too far away. In other words, if Stochastic crosses down and then the MACD doesn't cross down until like 6 candles later, it is usually a loss if you go ahead and follow that bidding strategy. So in this chart, right here, that's exactly what happened. The problem, the crosses were too far away from each other, about 6 to 7 candles, and it was weak. So also it was above the long moving average. But even though the long moving average was going sideways, and so that's actually decent, it was above it. And what I'm trying to show you in this video is when the cross happens in Stochastic, so it was overbought pretty well, crossed down. I thought that's really good. That's really good. If you look back here, though, it crossed down like right around here. If you're looking at it like that, probably right here. And then you got candle 1, 2, 3, 4, 5, 6. It didn't cross till like right here. That's 6.5, almost 7 candles away. This distance right here it doesn't look very far when you're just looking at it, but that was 6 or 7 candles difference, okay? And when I took this bid right here, I took it right as the MACD crossed, it totally just turned around and was a major loss, okay? But it did go down after my loss. I watched this chart for a little while later, and it kind of went like this, and then it went straight down. So it is like going down, but the momentum that you need to win a 2-minute bid on this method just was not there, and it usually isn't there. The best wins you have is when the MACD crosses and the Stochastic cross within about 3 candles, you know, and they obviously have to both be crossing from overbought or oversold, and they both have to be kind of high up and then going down with the trend. But like this was kind of flat, the trend was kind of starting to go up. The Stochastic crossed about 7 candles later. The MACD finally got to its cross, and it was a loss. Now, had I jumped this right when the Stochastic crossed, I mean, you can overthink everything, but had I waited still Stochastic crossed right here, and then I said, okay, and it looked like it was cricking, had I put a down bid right here, as this cricked down, boom, I would have won. So, but still, if you're waiting for them to cross together, which is really what the method calls for, then you have to let them cross very close together. And let's see, this was not that. I'm not going to show you that one. That was a different scenario. I'm not going to show you this one. Like, see this one. Okay, so this is what happens when you don't get confirmed crosses. You've got Stochastic crossing up here, and I was like, oh, the Stochastic crossed up here. I was getting antsy probably. This was not a great entry. It was a loss, a big loss, really. So Stochastic crossed. It was getting ready to go up, but MACD was going down. See? And so I thought the MACD was kind of pointing up at this point, right about my entry, and I thought, oh, it's going to win. So I jumped the cross. I went ahead and entered, and the next candle, boom, went straight down. So you have to wait for the cross. You really do have to wait for the MACD to cross. If the MACD doesn't cross or it acts funny, it's not saying that it won't go down. It's just saying that you probably will lose it if you think it's going to and it doesn't. I've been juked so many times by this method when I didn't wait for the cross. Now this one looks like a win. So let's see what happens on this. It was a pretty good win. It did follow everything that we want to zoom in here. We can see the Stochastic was overbought. Stochastic crossed down right here. Within 2 candles, the MACD crossed down. Okay, and as soon as it did, I took my down bid, maybe a little bit late, and I think I took this one a little late. I came up on this chart, probably I found it, and it was probably already well into it. It's dangerous to do that, but it paid off. I won just by a hair, though not by a lot, just by a hair. You can see a little teeny hair of a win. Had I entered this in right away as soon as the MACD crossed, I would have entered in like right here, and I would have won that much bigger. And then you can see, let's see, it's showing in this chart that there's actually a longer setup in this chart. So you can see this chart was going down, then it went up, then it went down, then it went up, and I really. It went down here. This was an okay entry, but it did work because I followed the strategy. It would have been better if I followed the strategy a little more, like a little sooner. In the next video, I'm going to show you how to win the huge fakie win. In the very next video, I'm going to show you what the fakie means and why I've actually been winning pretty good with the fakie. It's going to be a little more advanced method based on the double crossover, but I'm going to show it to you anyway because it does present itself, and I've found that it is also fairly reliable. So if you're not like on a really deep bid and you're just starting and you're like, you see a good fakie setup, you can take it. So check out the next video called the fakie win, the double cross fakie.